Good afternoon, this is Pat Walker at MissionWinners.com, and I'm doing a video here for Mo. And I have to share this with all of you, and I think this is very important because these are public to the VIP members. If you have any questions that are involved, please feel free to ask, and I will be glad to answer them. I just want you to know that. I found that oftentimes I can answer the questions in the VIP feed during the day with a typed answer, but at times some of the questions may be more involved and they require video, which is no problem for me at all. I actually love doing this. I love teaching this stuff. I love talking about this. And I also want to stress one last thing to all of you. I always do this out of respect for you. I will always respect your privacy if you want that, and that's very important to me. I just want to tell you that. And I will always respect your time. I'm not going to ramble on. You think, well, Pat, you are right now. No, I'm not going to ramble on. I'm going to get right to your point. So here's a couple of questions for you. The reason I bring these up is because if other people are watching the video, it may help them. Here's the first question. He says, where do you normally set your initial stops? Is it a fixed percentage, or does it have to be logical in terms of the charts? And the way I do this is two constraints, Mo. Yes, I always want losses of 5%, or I personally prefer 3% or less. But you asked a very important part here. Do you refer to the charts? Yes, I prefer to refer to the chart to tell me where to get in and where to get out. Normally, that is always a much smaller loss than 3 to 5%. Here's a case in point, Netflix. If you all remember correctly, we bought Netflix right here, lifting off. You can see this line right here. In fact, I'm going to go back in time. Sometimes that's the best thing to do. It was a downward sloping trend line. I said if it lifts off the 8-day and the market's decent, it could be good. It did it right here. We started buying some Netflix right here. Now let's analyze this. If I said, well, let's limit losses at, let's do 3%, okay? And let's suppose we got in for 330. That would be $9.90 loss. A $9.90 loss, taking it all the way down here. I don't really care to do that, okay? Down to 321. No, what my goal is here, actually, they'll be taking it down closer to 330, 320. My goal is this always. I want to find a really clean, precise entry. And we had it here lifting off this. If it starts to bleed back and just take out the lows of this bar, and if you noticed here, I want to show you something right here. The L stands for low, H stands for high. So watch the L. When I put it on this bar, you see that over there, 325.45? I'm going to point to it again. Right there, that number. Watch when I put the cursor on this bar. If we bought this, which we did, if it took out the lows for the day, I am automatically selling half, if not all, my shares. Why? Because good stocks don't test us. They push away. They just push away. Our biggest problem is that our losses, sorry about that, that was the answering machine. Our biggest problem is having something gap down on us. So we always try to run it extremely tight. Here's the next question. Do you size your trades equally across the portfolio? Yes, but size to me is a very, a word that has a tremendous amount of latitude. Size could be number of shares. So it's like, well, I'm going to buy 300 shares of Amazon, and I'll buy 300 shares of a $12 stock. No. So what will I do there? I'll do it in relation to dollar amounts. Run it that way, and it will work much better for you as we do things. So, just for what it's worth, I will factor into the equation, the cost of the stock. You buy 300 shares of Amazon, and that's a trip to the bank. All right, 300 shares of Google, that's a trip to the bank. So we'll do less shares. But percentage-wise of the portfolio, it'll still be, let me back up here. From doing IBD meetups, we take our account, divide it into 6, divide it into 10, the number of stocks that you want to own. Let's suppose that we'll just do the math simple, okay? Let's suppose your goal is to have 10 stocks. We take our account. Let's suppose it's a $50,000 account. Now, we're not going to talk margin right now, but I do use margin. But let's not use this right now. 50,000 divided by 10, $5,000 in each stock. My initial purchase is 1/2 of $5,000, $2,500. All right? So you buy 50%, then you buy 30%, and then you buy 20%. Okay? As it's going up in price. So that's how we'll do this. Okay? Have larger conviction on a particular trade? Yes, I will. Here's the question. Do you also, from time to time, have higher conviction on a particular trade over other ones that would choose you to go bigger to other ones? Yes. And I'll give you this. I'm going to quantify it. A long base break, to me, is much safer, less risky than a pullback trade. So by default, I will buy less shares on a pullback trade, bounce off the 8-day moving average line, than I will a long base breakout trade. Long base breakout trades, I'll put more into it. So you can talk percentages. Let's do dollars. Let's talk dollars. If I'm going to put $5,000 into a long base breakout trade, maybe I will only put $3,000 into a pullback trade. Why? Because it's riskier. If it's riskier, I am going to risk less money. Long base breakout trades, larger amount. Okay, how do you determine? Okay, let me see if I got else here. Kind of home run trade with good size in order to be able to significantly grow your portfolio. You know, I'll be very honest. I don't shoot for a bunch of home run trades. What am I looking for? I'm consistently looking for hitting singles and doubles, singles and doubles, singles and doubles. If I can get that, the account grows. I'm not after going for the big hit, the mega trade, to let you know. Here's the last question. When the market is under a correction or about to roll over, do you provide inverse ETF trade ideas? Yes. Yes, I do. I will take a look at the inverse ETFs on the major indices. I will specifically key on, I will tell you this, I will key on the inverse on the S&P 500 and the inverse on the NASDAQ. I really don't do the inverse on the Russell 2000 too much, but I will do the inverses. You bet I will. All right? I hope that helps you. I hope that helps everybody, Mo, and I'm glad. By the way, I like that. That's good, brother. Thank you for that with the nickname. I hope this helps you, sir. My goal is to explain things in a way that helps. I hope that helps you. Thank you very much, and I hope you have a good afternoon. And I'm sorry if this video was a little long, but I want to do it justice.